sponsored by the Securities and Exchange Commission of Nigeria.
Hello and welcome to Eye on Nigeria's capital market. Thank you for joining us. I am Esther Ogbodaga. The last decade has seen Nigeria's fixed income market evolve significantly, attracting thousands of investors, both local and foreign, who now have over $38.5 billion invested in local debt securities. Today, we'll focus on the launch of a new securities exchange and what it means for the next phase of growth. Nigeria's financial markets first began to record growth with the introduction of the Financial Market Dealers Association, the FMDA. The organization was established in 1989 to accelerate growth of the markets. It successfully stabilized the treasuries market with the introduction of the two-way quote on foreign exchange, treasury bills and fixed income markets. What was lacking was a regulatory body.
The FMDA is an association of the financial market dealers, of course. However, it does not have regulatory teeth. It is not actually empowered to regulate and enforce the marketplace.
The FMDA set out to establish an independent body that would have the authority to monitor and regulate activities at the markets. The Financial Market Dealers Quotations, or FMDQ, registered its over-the-counter market in 2012 with the Securities and Exchange Commission, the SEC, and on the 7th of November this year, it was formally introduced into Nigeria's financial markets.
So I stand here saying that we at the SEC endorse this trading rules.
FMDQ idea actually originated in 2009, and then the Money Market Association of Nigeria decided to move forward with the idea in 2010. The FMDA is an association of the financial market dealers, of course. However, it does not have regulatory teeth. It is not actually empowered to regulate and enforce the marketplace. So the idea for FMDQ was to create a market where people could transact business, and we would be a self-regulatory organization licensed by the Securities and Exchange Commission with the authority of a regulator. And that authority derives from the SEC, the Central Bank of Nigeria, and the DMO.
As a self-regulatory organization, SRO, FMDQ is designed to become the link between investors and issuers and other stakeholders in the debt capital market. It will power the capital markets to become a highly trusted and respected financial hub of activity where expansion is encouraged, businesses are enhanced, performance is driven, and stakeholder value is created. The purposes of FMDQ are laudable, and they draw from three strategic pillars. The first is self-regulation, and I guess SRO denotes that. It will monitor operations and conduct of market players by applying self-disciplinary rules in the market and preserving proper competitive market order. Innovation. It will foster the innovation of financial products and promote the development of the financial markets. Service, and this is very, very important. It will provide services to members by facilitating communication, providing training and information services, and protecting the lawful rights and interests of members. FMDQ will also implement government policies to better enhance reciprocal communications between government and the markets.
The official launch of the FMDQ PLC is an auspicious occasion for financial markets, as it represents one further step towards aligning the domestic markets with international standards, which is one of the objectives of the Financial Sector Strategy 2020. More importantly, is a major milestone for Nigeria, given the role the FMDQ OTC is expected to play in the mobilization of capital to the real sector by providing a platform for promoting liquidity of a wide range of securities, dissemination of information on a timely basis to local and international investors, transparency, and product development.
This is history making. I look at your faces, I see excitement, but I don't think you understand why this is history making. The reason it's history making is that we will not be able to tackle the challenges we face in Nigeria without a first-class bond market. And yes, the Debt Management Office, the Ministry of Finance, the government has done a lot, but we will not be able to get to where we want to be to address $39 trillion of funding requirements for infrastructure over the next 30 years, to address $350 billion of funding requirements in infrastructure over the next 10 years if we don't have a market that is sophisticated, that focuses on risk management, that is innovative, that is efficient, and that is one that is an example of world class. And that is what FMDQ represents. And that is why I'm excited. I'm even more excited as a regulator because it is a regulator's haven when your operators voluntarily come to you and ask to be regulated by yourselves. That is why I'm excited today, and I hope you share that excitement. But I'm also excited for many other reasons, because often I don't think people realize how important it is to showcase the best of Nigeria. And this is something that shows that indeed Nigeria is a great example for the world.
The Director General of Nigeria's Securities and Exchange Commission formally launched the FMDQ OTC along with its rulebook.
On this note, I would like you to join me in launching FMDQ. We've had a great journey leading up to a great start. I think what is even more important is to ensure that this great journey means that we have a great future. Thank you.
The launch of the FMDQ is particularly key for the federal government of Nigeria because a significant amount of the bonds traded at the OTC market are federal government securities.
What it means now is that we expect a boost, as well as more transparency, more effectiveness, more accountability, and more integrity in the trading of FDA bonds, most of which is done over the counter. As you know, the FDA securities are listed on the floor of the stock exchange, but as in most countries of the world, most of the trading on debt instruments, particularly the sovereign bonds, are traded OTC. So it is important that this segment of the market is organized in an effective manner. And the introduction of FMDQ fills that gap of making sure that the OTC trading is in an organized, integrated, transparent, and predictable manner.
Today, our fixed income market is a little over a third of our stock market capitalization. But compare it to the US, where the US bond market is $37 trillion compared to a stock market capitalization of give or take about $16 trillion. When you match it against some of our needs, which lend themselves better to fixed income securities, is it the work that McKinsey did for the federal government that established that over the next 30 years that we'll need $3.9 trillion to fund infrastructure alone. And on a yearly basis, for the next 10 years, the African Development Bank estimated that it would be $35 billion. You need a world-class bond market. So we need to take advantage of what the federal government has done in terms of establishing a good yield curve up to 20 years and establish a first-class bond market.
With this new addition, an exciting journey has begun for Nigeria's capital markets.
It means a lot for the market. I will tell you, I'm mostly fulfilled on a personal note today, because this was a dream that started about 3 years ago, and now we are here today to launch FMDQ. And so for us, it's as FMDA, we were doing something which we knew was not the best, but what was available as at that point in time. But with FMDQ, then obviously FMDQ, we possibly now have to do it in line with best practices. And so all that you are seeing here today is something that can be internationally acknowledged.
After the break, we'll talk to the people that made this dream a reality for the market and get a deeper insight into what to expect from here on. Welcome back to Eye on Nigeria's capital market. We'll continue our focus on the FMDQ OTC and the promise it holds for Nigeria's capital markets. Transparency has been a major challenge for Nigeria's OTC market, a trend the management of the FMDQ OTC say will soon become a thing of the past. Its self-regulatory status is also something promoters say won't be taken for granted.
You see, markets are built on confidence. Confidence comes with credibility and the assurance that, a market will sustain itself by best practices, by good technology, good infrastructure, and skilled participants. Products will be appropriate and products will be delivered as and when, required. So you need a platform, you need an exchange in this case, all right, that can deliver on all those. And I think that we are off to a good start.
Now we have a rule book, so governance comes into this market now, and we're taking that seriously. With that governance will come, on the back of that will be liquidity. And also today we launched what we call the FMDQ Daily Quotations List. And transparency ready. We're going to be showing market prices and also calculating model prices for market for their valuations. And then the regulators as well can then apply this for the necessary risk management and expect the operators themselves to adopt these model prices in valuing their portfolios. And this will extend to pension fund managers as well. But the major value add will be when we're able to provide prices and yields, not only at the close of business, but during trading hours. And hopefully if we achieve this, which we will, with some delay to the market in line with world standards, we should start seeing better liquidity in the market. We're also going to focus on settlement and also the operations and the technology we use for that, because at the moment, because of some challenges, we do not have overlap with the New York market. By the time we improve this area, we would have overlap with the New York market, and that's a big market.
In a strange sense, contemporary developments are such that SROs, self-regulatory organizations, are actually very well regulated. I think the paradigm shift, however, is that there is an expectation that the first line of defense in terms of regulation is done by the participants themselves. And of course, you then report on your activities on a regular basis, to other regulators, in this case, the SEC. There's also another interested participant in our markets, which is the Central Bank of Nigeria, and also by implication, the Debt Management Office. And the whole idea, in terms of regulating a self-regulatory organization works like this. You explain how you will conduct yourselves, you come up with your rules, you come up with your governance procedures and so on, and then you submit them to the SEC and others as the case may be, and they have a look at what you intend to do and say, yeah, this makes sense or this doesn't make sense. So we have to carry along the regulators in all respects. But within us, we have decided to operate at the very, very highest levels of corporate governance. We have on our board the Nigerian Stock Exchange, the CEO of the Stock Exchange itself. And I mean, they have proved to be extremely, excellent partners in terms of bringing some of the good practices that are being imported, into the stock exchange. I, in my other
capacity sits actually on the Council of the Stock Exchange as its vice president. So in that respect, we think track as far as governance is concerned.
With the assurance of a high level of market transparency and integrity, the Chief Executive Officer of Nigeria's Stock Exchange believes a great opportunity awaits pension fund managers and insurance companies.
Well, as you know, a lot of the pension funds and insurance companies have a long-term view. They are long-term investors. And the fixed income market gives them an opportunity to have exposure for long-term or long-duration fixed income products, similar to the 20-year, 10-year products. Now, with the OTC market coming online and being very transparent, they could easily exit those positions should they need to get cash or want to take money to invest in other asset classes. So it just gives more flexibility.
Without a doubt, expectations are high, and now the question on the lips of many in Nigeria is what immediate changes will be evident on the market.
We've started publishing the rates, market rates. I think that information is just going to get more in terms of how many rates, what products and all that. You should start to see some of the old products that died away being resuscitated again. For example, commercial papers. You should see a more formal approach towards the non-governmental bonds in terms of the state bonds and the corporate bonds through the membership of the bond listing members. So that you would start to see things quickly. The initial plan is to get things right. So what we already have, get it right, put it together in a proper way, and then start to add on. But that said, it won't stop us from adding on the low-hanging fruits that can happen immediately.
My expectation is to see more securities being traded in this market. I expect to see some level of depth, in the market, because market, again, you could say that the Nigerian market is a bit shallow, but going forward we'll see increased level of participation by people because now they're comfortable that the level of transparency, of awareness, of corporate governance would be put into this platform. And it's something that we are all looking forward to.
While a robust structure is in place to improve on operational efficiencies, market players say they're aware the road ahead may not completely be a smooth one.
I would just want to put some caveat there that we should just take time. It's going to take a bit of time for everything that we want to see in this market happening.
The biggest challenge, and I don't think I should call it a challenge, I think it's more of the biggest event that I see ahead is the financial community realizing how much things have changed. There's going to be a bit of surprise because I still get a sense that there's certain parties who have seen the change but are not aware of the quantum of the change. So you'd have a bit of getting people to understand and getting people to change, to believe in the change and to act to the change. So from an FMDQ perspective, they're going to provide that change. From a practitioner's perspective, the important thing is how will you respond to that change.
Nevertheless, the market is about to change from just offering plain vanilla products to a good cocktail of options guaranteed to attract more capital flows to the market and the broader economy. As the new management sets to work, the immediate focus will be the fixed income markets, which in the past have been highly unregulated and decentralized.
The two-way quote market for fixed income securities, now dates back to 2006. It's what we know. It's the easiest thing for us to begin with. It's a developed market, and it lends itself naturally to electronic trading as it exists in the developed markets in Europe and America.
Given the range of securities and products to be covered by the FMDQ, the new securities market requires regulatory support from the Central Bank of Nigeria and the Debt Management Office. Nigeria's Apex Bank fully supports the new exchange, particularly as it complements its efforts to strengthen Nigeria's financial sector.
And I'm very pleased to see that we are able to actually kick this off today. Now, the capital markets remain crucial for our structural reforms. We need to be able to raise long-term funding for infrastructure. We need to improve transparency and the depth of that market for development. And this was a critical plank in our financial markets deepening initiatives. So it was one of the boxes, like I said, that I wanted to tick before the end of my term. And I'm very happy that it's coming.
The FMDQ is owned by the Central Bank of Nigeria, discount houses, commercial banks, and the Nigeria Stock Exchange. Its 24 trading members comprise 21 banks and 3 discount houses. With a clear vision to make the Nigerian financial markets more sophisticated and competitive, both the regulators and the FMDQ team believe Africa's second biggest economy is well on its way to becoming the financial hub of the region.
First, this is an absolutely outstanding achievement for any market, developed or non-developed, because 4 operators who have been operating an over-the-counter market to come voluntarily to a regulator and say that they would like to have regulatory oversight. It shows where we are as Nigeria, because we recognize the importance of regulation, we recognize the importance of having world-class practices. What the FMDQ OTC platform will bring is liquidity to the federal government bond market, the sovereign bond market. It will bring efficiency. It will improve the level of sophistication. And for us as SEC, even most important, bring greater transparency to that market.
I envisage a market that is integrated. I envisage a market beyond banks trading, so other trading houses will come up, working behind clearing banks. For us to have a full capital market, I envisage FMDQ having trading members that are not even based in Nigeria because of the sort of technology we're going to adopt and the processes we're putting in place. As I mentioned earlier, believe that we must support the economy. And one of the areas we're looking at and to work with the federal government is the opportunity to put vehicles together that will pool monies and then get managers to get these flows, capital flows to the SME and the real sector. Some of them on their own would not be able to do this, but if we're able to put a program together, and we've seen this model in China, we should be able to, assist. Again, what we're doing will create tremendous opportunities for employment, because as the financial markets get bigger, as we launch into derivatives, you're going to need people, which is why we're taking financial markets education seriously, and we will be working together with some partners to take this education to primary schools, secondary schools, and getting everybody energized and having financial markets run in their blood.
Certainly a market that is globally competitive, a market that leads as far as sub-Saharan Africa is concerned, a market that is known for its transparency and is known to be extremely credible, a market that doesn't shut down, a market that can support the entire economy in periods of boom and also in periods of stress.
The biggest beneficiary of Nigeria's fast-growing financial market will be the economy. The FMDQ plans to develop a framework for the real sector and small business owners who will have access to funds from the fixed income market in the not-too-distant future. This will be a big boost for Nigeria's ambitious plan to be among the 20 most developed countries by the year 2020. Esther Ugbodaga, CNBC Africa.